Hello and welcome to another Smaulgld live stream. It is Sunday evening, the 12th of May, 2019, and it is Solid Gold Sunday with Smaulgld, where we talk about just gold. We leave the silver and the news and the cryptocurrency and the Federal Reserve and the rest of the world behind, and we focus on a gold topic. Tonight we're going to talk about, we've got a full show, Comex gold updates. We're going to take a look at what's in the Comex vaults at the various Comex approved warehouses. We're going to take a look at gold in foreign currencies and how it's doing. We're also going to look at the gold Dow gold ratio and also review the American Gold Eagle sales to date and also take a historic look from 1986 to 2019. All right, well, let's get started. We'll start with the Comex vaults because, mug stackers, that is where the price is basically determined. And we hear a lot of stories about how there's no gold on the Comex. We hear the same story about there's no gold, there's no silver at the Comex. And usually what they're talking about is the silver or gold that is registered. So let's take a look at the warehouses and what they say is in them. They are Brinks, the Delaware Depository, some of the same ones that you have in the silver depositories as well, HSBC, JP Morgan, and Scotia Makata. Let's take a quick one in no particular order. Then we'll take a look at all the gold rolled up into one in the overall Comex, and then we'll try to break down what it means. All right, so let's look at the Brinks vault. Now, the gold that you're going to see here listed in ounces is the gold that is in what they call good delivery form or eligible to be traded, registered. This is the 100 ounce gold, 9995 gold, 995 gold. It doesn't include any other gold that the Brinks Depository may hold on behalf of clients like Gold Eagles, Gold Buffaloes, Canadian Maple Leafs, other types of bars. This is just the gold that is traded on the Comex, and the reason for that is the contracts in Comex are 100 troy ounce contracts. So you trade contracts, you don't trade, but you can't substitute them for 100 ounces in the form of Gold Eagles, Gold Maple Leafs. That's not how it works. They have to be in these good delivery bars. So the numbers we're looking at reflect that. Now Brinks has 202,000 ounces. That's not a lot. And you can see that they have a registered amount and an eligible amount. And they really don't have much silver registered for sale, just 22,000 ounces. They do have 179,000 of it eligible. It's in the format, it's in the 100 ounce bars. It's just not registered to sell. So in the Brinks Depository, you could say that whatever gold's being held in there is actually being held and is currently not up for sale. But remember, if somebody is just holding gold, they generally, if they get it in the eligible form, it's generally because they want the liquidity, they want the ability to sell it quickly. They just are not interested at the moment in selling it. And of course, if the price rises, then they may be tempted to flip that into registered stock. So that's Brinks, not a lot. Now remember, we saw with silver, they have like 51 million ounces. They got a tremendous amount of silver. They get the second most amount, but they're not a big player in the registered Comex gold. So look at the Delaware Depository. Not too much either, 103,000 ounces, 103,500 ounces. And not much of it is registered either. Only 12,891 ounces. That you can see is in your dark green. So Delaware Depository and Brinks, not a lot of gold in either event, and most of it just eligible and not registered for sale. JP Morgan, not as big of a player in gold as you would expect. They're a much bigger player in silver, meaning they're warehousing a lot more silver than they are gold. However, unlike Brinks and Delaware Deposit, they have over 1 million ounces, 1.3 million ounces. The others had 200,000 and 100,000 ounces. And they have a fair amount registered. In fact, they have as much registered 105,000 ounces as the Delaware Depository, I think, had in total ounces. Yeah, the total ounces at the Delaware Depository were 103,000 ounces, of which only 12,891 were registered, whereas JP Morgan has 1.319 million ounces overall and 105,000 registered. So JP Morgan, a much bigger player in the gold than either Delaware Depository or Brinks. Now, we know that the Delaware Depository and Brinks also would have other gold and other silver that they hold on behalf of clients that are custodial service, but still they do not have a large amount of Comex eligible gold for trading. And the last one we want to take a look at, well, no, let's take a look at two more. The big one is HSBC. HSBC has 5.614 million ounces in its depository, but notice only 36,000 of that big hoard are up and registered and ready to go. Now, a lot of people say, well, what happens if there's not enough registered for sale? Generally, they'll either cash settle or someone will put their eligible stocks over into the registered column. It's generally not an issue. Most of the contracts are not looking for settlement. They may issue delivery notices and then the contract may expire. They may roll it over instead. Or in many instances, they do take delivery, but the bulk of the contracts either expire or simply roll over without delivery. And most of HSBC stock is not ready to go. It's in eligible form, but it's just not registered at the moment. And let's take a look at one last one. Scotia Makata. Really shouldn't be called Scotia Makata. They've changed their name back to Scotia Bank. And they have, as you can see, decided to roll their precious metals unit, I believe, they did this sometime over a year ago, into the regular bank, into the commodities unit. It's not a standalone business anymore. And as you can see, it looks like they're exiting the gold business. At one point, they were the first or second largest holder of gold and next to HSBC. And, they would have had 5 million ounces back in 2011. And it's in a steady decline on their holdings. And you can see right now, registered stocks are only 31,000. And let's roll it all up into the full Comex position. Meaning if you take all of those different Comex approved warehouses and add up all the gold, you get 8.33 million ounces. Not an insignificant amount. It's not a mega amount, but it's large because in a given year, Russia may add about that much, 8.3 million ounces in a given year. So it is a decent amount. As I mentioned, it's not the largest gold hoard in the world, but it is a large amount. And of that, though, only 0.21 million ounces are eligible for delivery. But again, that doesn't cause any issues. So they got about 252 tons. Last year, Russia added 272 tons. So a little more than 8.12 million ounces added to the Russian hoard. But there's a decent amount of gold at the Comex. But again, it doesn't cover the trading volume. I think we mentioned the other night the trading volume is some ridiculous amount, like 27 tons a day. And that's according to Comex. That's their own. I pulled it off the website. I pulled it up. While we're talking, I'll pull it up again. But here you see 252 tons is what they have in the warehouses, and they're trading 27 tons a day. And again, it's paper, as everyone knows that. Don't expect any of that to change. That is how gold is now traded. Gold has a monetary fiat value on it, and that is what the traders are trading. They're fully aware that they're not there to buy and collect gold. They know it's an option, but that's not primarily how they're trading. Remember, if they're commercials and they're trading for a bank, they don't want the gold. They want to be able to book a profit in fiat, and that'll go towards their company's revenue, towards their bottom line. It'll go towards the trader's bonus, and it'll go help the bank's stock price. They don't want to hold and store gold. That slows them down. They're interested in trades. They're interested in velocity of the trades. They want to make as many trades and as much fiat as they possibly can. So that's why all these stories of when they wake up and they decide they're going to stand for delivery. No, they're not. So let's just take a look at what that looks like. All this gold we were talking about in a different fashion. This is from Nick Laird's charts. What he shows here is what we were talking about, how much eligible gold is in the Comex, and I had estimated about 252 tons. He's got 259. Well, I guess it's eligible as 252 tons. And then there's that little sliver in the lighter yellow that shows how much is actually registered. It's only 6 tons. So of the 259 tons this year, only 6 tons are ready to be sold. But you can see in prior years, it's been that low before as a small percentage, 2013, 14, and 15. It's more, I believe it's more of an administrative detail than an actual issue, because everything you see on the screen can easily be registered and used to settle trades and sent for delivery if somebody so desired. But another good chart from Nick there, from Gold Charts R Us. And then there's the interesting chart here that he managed to massage the data, where he shows we actually don't have any noticeable decline in gold stocks. In fact, they've gone up at the Comex since 2013. You can see from about 6 million ounces, and where we are right now at about 8.1 million ounces. It's been up as high recently in 2016 at like 11 million ounces, about 10 million ounces last year. It's gone down a bit, but you can see it's higher than 2012, and it's certainly much higher than any year prior to 2011. See the line going up. What's interesting, though, is the amount that's actually registered has gone down. You see the registered stocks are on the way down, as represented by the dark green line, and the other one, the eligible stocks, by the lighter green line. And the last thing we want to talk about before we move on about Comex is the owners per ounce. You've heard of this owners per ounce concept. It's somewhat of a misnomer. It's getting at the amount of contracts that are outstanding and what the value of those contracts is if you added up each contract and how much gold that each contract would represent by how much gold is actually in the Comex warehouses. So we'll break it down. We'll look at the top line where you see CME gold. That's essentially just the price. That's the gold line. And this chart goes from 2010 from left to right to 2019. And you can see the gold line pretty much flatlining since 2015 under that 1400 mark there. Then you have in the second box down the open interest times 100 ounces per contract. Each contract, as we mentioned, represents 100 ounces of gold. And you take the number of contracts and you multiply it by 100, and you've got 47 million ounces of gold that is out there in contract value being traded. Now remember, they only have, 12 million ounces in total, but what's registered is only like 120,000. It's 210,000 ounces total. There's very little that's actually registered. So they don't even have 1 million ounces of gold registered. They have a lot eligible, not to cover 47 million. As we mentioned, they have about 12 million. But here you see what it breaks down to is if you take just the gold that's available as registered to be delivered to satisfy contracts. And you take a look at how many contracts are outstanding. There's 47 million ounces worth of contracts outstanding, and there's only 212,000 ounces available at the moment registered to be delivered. That gives you what you would call owners per ounce, 223 to 1. And we saw in 2016 that had reached over 500 to 1. However, it's not as dire as it might seem when you then take not the registered shares, but you take all of the registered and eligible gold and you divide it by the total amount of contracts outstanding, and you'll see, again, there's 47 million ounces outstanding in terms of contracts, and there's 8.3 million total stocks of gold that are there, which gives you owners per ounce of about 5 to 1. So that's where you really don't have an issue, because for the most part, 95 to 99% of contracts do not look to, quote, stand for delivery and take their gold. So there has not, this is the whole nonsense. It's as big of a foolish story of the Comex default story is as big as much of a pumper story as JP Morgan has however many millions of ounces from their Silver Eagle buys. And those are just two stories that are constantly been repeated for over a decade. And they get new people to believe them. They're repeated enough, people believe it. It's done nothing for the price of gold or silver, and nor should it, because they're not true. But all right, let's move on from Comex and take a look at gold and foreign currencies. We get a lot of questions about, yeah, but gold is really doing well. It's just not doing well against the dollar. And that is indeed correct. We do have an issue with the price of gold in dollar terms, but well, let's demonstrate it with the chart. So here is the gold in US dollar charts. And, you're going back 2 years here, and you can't get above that 1340 mark. We've gone from, this is a 2-year chart, 1300 down to 1175, back up to 1340, and we're currently around 1280. And there's a bit of a rise there, but we're not quite, there's no breakout there. 1340 has been the upper limit. But when we go over to currencies that aren't doing as well as the dollar, well, we see a different story. First, we're going to take a look at Canada, and then we're going to take a look at Australia. Both are dollars. They're Canadian dollars and Australian dollars. Well, let's see. We have an increase in the Canadian price over 2 years. You're starting at around 1660, and we're now at 1730 in Canadian dollars. That's what the chart shows. But it's even more dramatic with the Australian dollar, which we'll see. It started at 1720 Australian dollars, and we're currently at 1840. So you see an actual rise in the Australian, the price of gold versus the Australian dollar, which does indicate, and I can show you other charts of Brazilian real and Australian. They're even worse. The price of gold actually is doing very, very well against those currencies, doing well against the Turkish lira. But I wanted just to focus on Australia and Canada because we have Canadian listeners, we have Australian listeners. Those economies are considered on par in many respects with the United States. But you're clearly in the dollar is strong. The Australian dollar and the Canadian dollars are not widely held. They're not used as much in international transactions as the US dollar is. And that's why the dollar has that value. You could say it's worthless. There's a lot of debt. What creates demand for the dollar is the demand for the dollar. That's really it. And because everyone needs it, everyone uses it. You could say they don't need it. They can just dump it. They can't. Their economies run on it. So without getting into all of that, that's why gold versus the dollar, why gold actually some years in the last 20 years has not outperformed the dollar. You would think that a commodity, precious metal, limited amount, rare, long history, that gold would always outperform the dollar. It's probably the only currency that gives gold a run for its money, and sometimes gold does decline against the dollar in recent years. But in most currencies, we've seen that gold almost always outperforms any other currency. And if you're dealing with things like the Kazakhstan tenge and the Argentine peso and the Brazilian real and the Iranian this and the Czech that, whatever it is, the gold will generally outperform fiat currencies by a wide margin over time, and even the dollar. But the dollar gives it a run for its money just because it is how the globe transacts. Gold, if gold was actually a transactional currency, so to speak, then and that's actually what happened. Why Bretton Woods ended was because the French and the Swiss and the Germans and any other country that was collecting dollars that was entitled to bring them to the United States under the Bretton Woods agreements and get gold for their dollars, they did it. They said, well, okay, if the gold is backed by dollars, that's nice, but the gold is the gold, so we're just going to come and take the gold. All right, now what else do we have for gold tonight? Well, the Dow gold ratio is a very interesting one. It's at about 20 to 1 right now. And again, the interesting thing with the Dow is the Dow and the dollar are somewhat synergistic. The Dow does well because it's where the dollar is and it's the United States stock market, and the government understands that. They understand that. Greenspan probably the first to understand it the most, that if you were going to protect, quote, dollar hegemony, you had to protect the stock market too. Because if countries want to invest in the U.S. stock market, they're going to need dollars, and they want those dollars flowing into the stock market. It kind of works together. They need the stock market to be robust. And we have not seen, since 1987, when Greenspan first stood ready, willing, and able to add liquidity to the markets when the markets collapsed in October of 1987, even in 2008, when we had the massive hit and the liquidity froze up, they still managed to keep the stock markets, back to where they had been within a matter of less than a year. So that's the biggest difference. The 1929 stock market crash, the values did not get back to 1929 highs until like 1951, 1952. Whereas in 1987, they were back by 1988, and in 2008, they were back by 2009. So that's a direct result of intermeddling, intervention by central banks, exchange stabilization funds, plunge protection team. It's all part and parcel of it. It's almost a national defense issue that the Dow Jones. In fact, you read spy novels. They always have these things during the Cold War. Russia was going to crush the dollar or crush the stock market, create chaos. So clearly, the stock market is in some respects, a protected entity, as is the Comex. This idea that someone's going to collapse the Comex is utter nonsense. That some trader is going to come in there and stand for delivery. I don't even want to get into that fairy tale. Okay. That's it on Dow gold ratio. Let's look at gold ETFs. Now, gold ETFs, some might argue, actually helped boost gold demand through 2011. You do see the big increase in flows into the biggest gold ETF, the GLD SPDR GLD fund. You have a claim on the value of gold. You really don't have the ability to retrieve that gold unless you're of a certain size, and then you have to place a notice, and they have to make baskets for you, and generally I've heard that no one does it, and if they do try to do it, they try to discourage them. But in any event, this is what they say goes in and out of these gold ETFs, and they became very popular, replacing in many instances gold trading, Comex trading, and also physical buying of gold, because the idea was that this was a convenient way to store gold. You didn't have to do your own insurance. You didn't have to pay for your own storing fees and so on. And if you pool all of your money, you can get a much better rate on insurance and storage. And also you can trade it a lot easier. You don't have to package it up or move it from one pallet to the other in a warehouse. All you do is go online, you go to GLD and you hit sell X number of shares and you're out. If you want to buy back, you do the same thing, buy GLD and you're done. And this was a convenient way for people to buy and sell, quote, gold. And this year, it's down a little bit in the flows. This chart actually, it's interesting. The silver one doesn't do this for you, but the gold one does. The gold flows generally follow the price. Price goes up, people put money into it. Price goes down, they take it out. And you can see that from the black line. The black line is the price, and then the shape of the outline of all the other ETFs somewhat follow that. You can see it if you can squint and see the black line as it flows up and down. It pretty much, as you can see in the last couple of months, we've seen the price go down, and you see the flows at the very end of the chart go down as well. All right, let's take a look now at American Gold Eagles. It's interesting that they're not very good. Now, we're halfway through almost 2019. You can really have to strain to see what's over there. The reason I wanted to show this was this is a chart showing the 1/10 ounce sales and the 1 ounce sales, and they're in unit sales. So the big bar in the middle sticking up 2,765,000, that's 2.7 million 2.765 million 1/10 ounce coins. That's not 2.7 million ounces, but it's interesting that year that it's up that high. That was because of the Y2K. It's interesting that 1999, those are two very big years, and it's because people were buying gold. And they were thinking the lights might go out, the grid might go down, planes might not fly, water might not work, so they wanted to have gold. But it's interesting, they bought the 1/10 ounce because that would have been a barter ride. Now, back then, the price of gold was only a couple $100, $300-400. So you can buy those little 10th ounces for $30-40. They were a good deal. And a lot of people, they buy silver instead of gold because the gold-silver ratio. And even then, they say, well, this gold is expensive. But there is that option to get the 1/10 ounce, and they were relatively popular. If you look to the far right, 2015, they did sell almost 1 million of them in 2015. They kind of come and go in popularity. Mostly if you're an investor in gold, I think you buy the kilo bars, and the rich people who can put them in the Comex vaults, or you buy the 1 ounce coins. Generally, you don't buy the 10th ounce, although they're not a bad price. I think you can get them for about $140 right now. We've got links below if you're interested in buying them from Golden Eagle Coin, ST Bullion, and Money Metals Exchange. And I think they're about $145, which would mean you're paying like $1,450 per ounce. But because you're getting a smaller coin, there's a premium on it. Whereas if you were to buy an ounce coin, you would only pay $1,325, $1,330. But it is a way of accumulating gold in little increments, and it looks like I don't think they're probably, with the price of gold at $1,400, they're probably not the barter item they might have been in 1999. But you never know. I mean, they're interesting. They look like little dimes. But let's take a look also historically at gold to silver sales, not ratio, but just what was sold. And you can see in 1998, look at that little number, 2.8. They only sold less than 3 times the amount of silver units, not price, as gold. And that's because people were preparing with gold in 1998 and 1999. You can see that 6 to 1, 2.8 to 1. But look at 2000, it went to 97 to 1. That's because when there was no crisis in 2000, you saw the roaring .com bubble going. The gold, no one wanted at that point. And there were some collectors buying silver, so it went up to 97 to 1. But you can clearly see that when the coin first came out, the American Gold Eagle, it was far more popular than the Silver Eagle on a relative basis. Remember, the gold was still, even the ratio back then was still 50, 60 to 1 as well. But you can see in recent years, silver getting a much higher ratio of silver sales to gold sales. And in fact, in 2014, when the ratio, if you can see, there's 105.91 to 1, I think that year the equivalent dollar amount of silver was as great as the dollar amount of gold sold, which makes sense because it was over the gold-silver ratio. See, when you get to 82 to 1, 87 to 1, and you sell as many silver coins, you sell 87 times more silver coins as you do 1 ounce gold coins, well, then you're selling the same dollar amount. Interesting chart there. We'll have all these charts for you tomorrow on Smaulgld.com. I put them up the next day. I had to notify the patrons and the Subscribe Star people that last night we had an issue with the images showing, and again, I put them up the next day. They're up there now. From yesterday's, we talked about silver and the piece of dollar. And one final chart. This one's not as important for gold as it is for the Silver Eagles, for the Gold Eagles, but are premiums. The Silver Eagle premiums right now make the new coins really not a good idea to buy. You're ending up with paying 15, 18% premium over spot. Whereas the gold, they generally, depending on if you're buying between 1 and 9 coins, you're going to pay 5%, 3% to 6%. They don't generally move around much. Right now, they're about 5%. All right, that's all we have for gold. There's a lot more in China and India and Russia. We'll get all to that during the week or next Sunday. Let's see what you guys are saying in the comments. And then tomorrow we'll be back to our regular news cycle. A lot of crypto stories, a lot of trade war stories we got to get to. But we'll talk about all that tomorrow, unless you got questions in the comments. If you want your comment called out, put SMAULGLD and I'll see it. And let's see what you're saying. All right. Who do we have tonight? Philip first. Yes, hello, Philip. DB is here. DB Stupid, which stands for Don't Be Stupid, he says. All right. Who else? DB Stupid. Smaulgld. Where do you see this sales tax on precious metals heading? National VAT, federal protection for metals as investment, no sales tax. People are pissed off about sales tax issue. Well, actually, if you look, I've done a survey on this. I think it's over 40 states don't charge sales tax on precious metals or have some type of exemptions. This is not a trend that's going the way Ohio is going. Ohio actually also just recently, like I think 10 years ago, 9 years ago, whatever it was, they had come up with the exemption. Now they're looking to get rid of the exemption, but that's not a trend across the country, paying state sales tax. The real issue is the capital gains tax on the federal level. That's actually where you get hit. Well, you don't if you don't have gains, so then you don't get hit. But if the price of gold or silver were to rise, and you'd have to pay capital gains tax on it. And there has been talk about trying to get rid of the capital gains tax with the argument that it's money, so why would you pay tax on it? It's still an ounce of gold is an ounce of gold. That really hasn't gotten much traction though. And the other thing is, you have to remember, all this stuff is political. You have to figure how many people are silver holders, how many people are gold holders, how many people are collectors. What's the political capital there? How many people are there? How much money do they have? And unfortunately, I would say there's just not a lot that have a lot of money that are going to do political lobbying and get the laws changed. That's how laws get changed. They're either you have a numerous group, whether they have money or not, but they represent votes. So they can get things done. Or you have a small special interest group that's very powerful because it's got a lot of money. And that's why I also think that the crypto thing is a big deal, because a lot of those people have a lot of money. The early adopters have fortunes, and they're using it for political influence. Now, the problem with silver stackers is they got no money. If they've bought their silver, they've lost value, so they're not rich and powerful and running around and telling their congressman, hey, you better take the tax off of my silver eagles. So I don't see anything happening there. DB Ann is here. What else do we have? Silver Stacker for Life is here. Jack is here. A lot of people here, the same names all the time, which is good. Daniel Gummer, a new gold ETF, GOAU. Yeah. All right. Nick Carducci. Its best estimate of total gold in existence. Comex and central bank and gold coin broker sales on the way. Can chart it faster if you link me data if you can. Try to link me data. The World Gold Council comes up with something like 180,000 tons. And don't know how they come up with that number. Central bank gold is easy to figure out. That data you can get on the World Gold Council, it's only about 10-15% of overall gold. Then there's estimates you have to take into account how much gold is in India, which would be what they estimate is in individual Indians' hands and temples. And they say that's 25,000 tons, which is probably more than all the central banks put together. And then they say in China, you have to look at the Shanghai Gold Exchange, you have to look at the Chinese gold production, you have to look at the imports into China through Shanghai, through Hong Kong. And you get about 25,000 tons in China too. So now you're at 50,000 tons between China and India. They say there's like 15,000 tons in Germany. Then there's a lot of jewelry. Most of the gold is not in bullion form. So I don't know how they come up with 180,000 tons. But remember, they still add 4,000 tons a year to the stocks from the mines. Coins AZ is here. All right, Daily Coin. Silver Stacker for Life. We were reporting on the Dow Jones Industrial Average correction of 55% back in 2015-16. It's way overdue. Yeah, but Rory, by normal, a market that's not fiddled with, that doesn't have an intervention, sure, you would just, a normal market would correct. It would correct on the basis of valuations. But when you have companies like Uber and Snapchat and Lyft that are going public with no value, with no profits, and no even path to profitability, then you can see look at the one with Elon Musk, Tesla. It's out there 10 years with no profits. So the corrections, you would say they'd be long overdue, of course, but these are not markets that are driven by fundamentals. They're driven partially by fundamentals, and then they get boosted when they need to get boosted. Look, you got the Trump pump, you got the Powell put. People are saying, they're insisting the market's going to collapse. It's not a market. I guess people don't understand that. It's not a full-on market. They say, when the free market takes over, why would it? It's not. It's controlled. When the Swiss National Bank can pump $100 billion into the U.S. stock market and buy stuff like Tesla, well, then the price isn't going to go down. It's got nothing to do with fundamentals. If there are entities willing to buy stuff, look at the Bank of Japan. It buys the Japanese government buys everything that they own, like 60% of the ETFs on the Japanese stock exchange. How can they go down? They can have terrible years. They can have bad earnings. It doesn't matter. Anyway, that's why I say that the valuations are totally skewed, because the government intervention in the central bank today is far stronger than it was 10 years ago, 20 years ago, even then in 1987 when Greenspan pretty much kicked off all of this. What's est for private ownership in USA? Don't understand that one. Yep. Daily Coin says manipulation is the name of the game, and the reason we have seen Chipotle stock at $700 for tacos. Of course. I mean, there's no... When people scratch... I understand when you first see it. Yeah, you scratch your head and you say, this is crazy. But I've seen people for 10 years scratching their heads. Like, don't you figure it out yet? Yeah. Rationally, it shouldn't be this high. But it is, and you have to understand why it's this high. It's not because there's a new paradigm or there's no such thing as revaluing things so that a company that doesn't make a profit is somehow worth something other than they get people to buy it to drive the price up. And the reason people buy it is because the price is going up. And the stock chart looks good. And that's how they trade. It's got nothing to do with how well the company's doing, really. Because you couldn't. Here's how you have to look at it. If you had your own money, and let's say Tesla's worth $36 billion, which is, I think, what the market cap is, and they told you it doesn't make any money and it costs, I don't know what their loss is every year. Let's say it's $110 million a quarter. And let's say you had $40 billion lying around and you can own every last share of Tesla. You wouldn't raise the price if you just gave them, so look, I'm going to buy the whole thing, $36 billion. Who in their right mind would do it? The only reason you would do it is if you can leave it on the stock market and hope the price goes up. But if you were to take it private, like Elon Musk was saying, you'd be out $36 billion because you'd never make that money back. Never, ever, ever would you make that money back. All right. What else do we have? Phil McCain. The Ohio sales tax and PM has passed the House on its way to the Senate. It's probably going to pass. I agree with that. That's just... It's unfortunate. I don't even know why they're going after it. They're saying they're losing $3 to $5 million. It's very strange. Oh, this is Smaulgld. Estimate the ownership of gold held in private hands in the U.S. Well, the way you would do that is you could take the U.S. Mint sales, and then the World Gold Council has jewelry sales. The jewelry sales are probably bigger, much bigger, and you'd have to calculate it that way, and then you'd have to figure out. I would say the United States, and then you also have to count the gold that's actually in the United States that doesn't belong to the United States, i.e. the gold held by central banks in the United States. Then you got to count the gold at West Point, Fort Knox, and the other places. I would say the United States also has an excess of 20,000 tons of gold. Yep, Pablo Pena. Trump says the stock market will not crash in his watch. Now that I think of it, the big players that maybe knows he won't let it drop and pop it up by the dip. I get that's buy the dip has been the mantra since 2009. 10 years. That's not how a stock market goes up and down. This one goes up, it goes down a little bit, then it goes right back up. So it's not, there's no, the reason that a guy like Warren Buffett can't beat the market anymore is because it's not based on fundamentals. Buffett was smart back in the 50s and 60s. He used to use this Graham something or other technique of identifying undervalued stocks based on all these different forms, and he would buy them. But today, he can't do that. I mean, he would never buy a company like Tesla because Tesla doesn't make any money. There's nothing to analyze. I don't even know how that company even has any market cap. You got Elon Musk out there half the time incoherent, tweeting stuff and looking like he's violating SEC rules and not making any money. So that's a classic example of what you have to point to, or the poster child for why the stock market is not based on fundamentals, because that's a company that would not have existed, would never been able to go public. I mean, you can't be public for 10 years and make no money. Well, of course you can. If you're Tesla, $36 billion worth. Alrighty. Buy the dip is even adopted by the Bitcoin people, says Ann Holm. That's right. Buy the dip. That's why I believe that the whole cryptocurrency thing is destined to go higher. You could say it's nothing. There's just a string of digits. That doesn't matter. If Wall Street wants to pump it up, they're going to pump it up, and they can tell you why it's going to go higher. And people will buy it, and the reason they'll buy it is because it's going higher, and it'll go higher because Wall Street will put money into it, and then it'll go higher. I mean, that's not investment advice. It's just people say, well, it's not like a stock. You can't analyze it. Well, then how come you have stocks that don't make any money, like Lyft, Uber, Snapchat, and they're going higher? Because they can make them go higher. Rules. What are those rules you speak of, says the Daily Coin. All right, everyone. Well, I want to thank you for joining me. Each and every night, I try to get it every night. Sometimes I miss a night, but we do try to start around 7:30 Eastern Standard Time. So I want to thank everyone for joining me tonight, and we'll be back tomorrow night. Unless there's any further questions, I'm going to give you the 10-second Bernie countdown, and then we'll see you tonight. All right, so
I don't want to talk about Beto, and I don't want to talk about Trump, so I'm just going to give you a 10-second countdown. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1%. Have a good night, mug stackers.